right. Give everybody a second to hop in. For those that are coming from um, my room, the way to use this chat is on the top right corner of the stream in Discord. It says show chat. That's where you guys will chat. A little bit different than what we do. All right, give it another minute and then we'll get going. All right, let's get going here. So for those that were here yesterday, my name is Joe Pokshiva. I'm new to the options depth team. I work with a group called Steam Room Trading, which is with the Wall Street Jesus, Ron Friedman, and Sang Lucci, where we have a trading community, and I focus heavily on dealer profile, gamma, VIX, FANA, charm, all of that fun stuff that we talk about in here. What I learned yesterday kind of doing this was I think a lot of people want to see and understand like the basics of all of this and how it works, the function of all of it, and then breaking down some core ideas on how you could potentially trade it. So again, I'm gonna kind of start with the basics of all of this. For those that have heard it before, nothing of this is going to be new. For those that are new to this, feel free to ask questions. We'll start with kind of the basics, and then I'll break down two trades that I kind of took off today's profile that worked really well. But first and foremost, this is the Options Depth platform. For those that have not seen it, that are joining on the public end, this is where we can see all of the actual dealer positioning breakdown. And it has, there's nothing on this is naive, right? Most of the calculations that you guys will see on the outside are naive calculations. Nothing here is naive. This is true science SIBO data, which gives us really good insight to what is happening underneath the surface to help you guys make better decisions when you're trading. The way that it kind of works on side of the dashboard, right? On this left side, I have it showing as gamma. There's platform for tutorials inside of the education. If you guys need links to that, let me know, but I'll just make an assumption here that you guys can figure out how to make dashboards, and we'll just talk about the intricacies of what you're seeing. So this left side is like your gamma heat map. To the right here is your breakdown by strike of net market maker gamma exposure. What we're looking at with all of this is where do we sit currently when it comes to market maker gamma and how that can help you make decisions inside of your trading. So first and foremost, what is gamma, right? Gamma is the second order Greek of delta. And when we're talking about it in this context, we're talking about how gamma affects delta change, which obviously talks about the delta hedging component. And that's what we care about, right? We want to understand where there might be inflection points inside the market where market makers have to do something, and we can take advantage of that information or better understand the environment in which you're trading, which will help you guys, especially for those that are trading in short durations like I primarily do. So first, what is gamma? You have like I said, it's the acceleration of delta, right? It's closest, it's largest, closest to the at the money strike, closest to expiration, which is why we focus so heavily on the 0DT expirations, because gamma is largest during that time in that window, and why it becomes so important on an intraday basis. If you look at what people usually talk about online or on, FinTwit, they're looking at the broader scope and the broader picture, and you can do that in here as well. It's super important to understand the environment you're in. But if you're trying to trade intraday, these gamma levels that you see, or this information that you're going to gain here, is going to give you more insight on how to particularly trade it. So we'll start with the basics of positive and negative gamma. So I like to, when I show this to people, I like to use the 3D model to explain this. It's going to look scary at first, but is the easiest way to understand what we are talking about when it comes to gamma and the way that you guys can trade this. So this is the current 3D model that you have of gamma. Again, it looks really confusing, but I want you to really focus on the size of all of these little valleys and peaks, right? So the way to think about this is positive gamma, dealers are going to trade against price, which is why it kind of quenches volatility. And in negative gamma, dealers are going to trade with price, which could have this effect where you have an increase in speed in the price action, because now if we sell, they have to sell. If we're buying, they have to buy. The easiest way to visualize it is with this landscape. Imagine that you are someone who is running, right? You're a runner, or you have a ball, whatever way you want to put it, and gamma is the landscape in which you're running in. In positive gamma, which you see here a little bit, if I zoom in, you can see this positive gamma here, right? You're running uphill. You're running up against price. Okay. And think about it as somebody who's running, right? What happens when you're trying to run uphill? It's a lot harder, right? You slow down. You can't have as much speed. On the flip end, if it's negative gamma, you'll notice these little valley here. And this is not the best day to kind of show it because positioning is light right now, but you see this little valley, right? This is you running downhill, right? So think about that analogy. What's easier to do? Is it easier to run uphill or run downhill? Or if you had a ball, is it easier to push a ball up a hill or have a ball roll down the hill? That is the function of speed that we're talking about with gamma. Okay. That is how we kind of perceive and look at all of this. So just always imagine that as your basic analogy, right? And understanding how gamma reacts to price, right? And gamma is not a directional thing. That is the number one thing that everybody kind of tries to say, like, oh, if this happens, we have to do this. No, it's a reaction, right? So if price action wants to go higher, we push into a positive gamma node, it will slow down. Vice versa, if price action wants to go lower and it's into a negative gamma area, we will increase with speed, right? They're just reacting to what price action does. And that is the easiest way to kind of visualize it. So always just remember that basic analogy. Gamma going uphill on positive, downhill in the negative end. And this is where this 3D model comes into play. And then, because like we said before, gamma is largest at the money and largest end of day, look at these peaks and valleys that you get end of day, right? So these are what I call mountaintops, these big, huge blue gamma peaks. And then you have these valleys down here, right? Big, deep valleys of negative gamma. So you just know that as we get closer to end of day, there is the potential here for speed to decrease quite a bit or for it to increase depending on what you're in from a gamma perspective, right? And this gets more clear. There's days where there's a lot of positioning and you'll see how it kind of flows on the surface. And there's other days where it's kind of light and we're jagged all over the place and we're just falling in the in-between, bouncing around. All right. Does anybody have any questions on like the basics of gamma and why this matters to us? Do you guys understand what I'm talking about, or did I lose you guys when we're talking about this? And yes, Bruce, this will be saved and re-uploaded. Cool. So if I go back now here, that 3D image I showed you is now broken down on an easier to understand 2D map, right? That's what you're seeing here. So all the stuff I just showed you, it's much easier to visualize this now in 2D, but now you understand what we're talking about, right? In this red area, which is negative gamma, this is like those valleys that you're starting to create. Although the values here are relatively light, right? You could see on the top left box here, gamma is only minus 68. So it's not a deep deep color. That's why it's as light as it is. Versus if I were to go and put my cursor down here at 6530 towards end of day, you get a much larger positive gamma number, which is 1605, right? That's a much bigger number. So this is what you're seeing, right? And then these black lines are your gamma flip levels. So you can see that from an intraday basis, we're in negative gamma now. But if we get down to here, which is 6560, right, we flip to positive. And why does that matter though? Well, one, you have the potential for increased movement into this negative pocket, depending on what happens with buyers and sellers. And a lot of times, most of the times, these initial flip areas provide support or resistance levels on both sides. So, what I would be looking for off of this particular profile is, oh, if this is where that flip level is, maybe we'll get some support. I might be able to use that as a way to potentially get long on the indexes today, right? For a quick little scalp. The way that you trade this is kind of the art of all of it. And the way that you interpret it, there's an art form as well to it. But the basics of what I'm talking about here doesn't change. It will always be this way. These are your flip lines. Negative gamma is negative gamma, positive gamma is positive gamma. And then more importantly, you get these peaks, right? So you see these big green lines, right? These are your gamma peaks that push out from zero DT positioning that gets larger and larger. And if you guys were trading when Condor Man was around, some of these peaks get to be really large and you can trade off of them for as levels. Because again, when we get to an area of like high positive gamma, you're going to expect speed to slow down. It doesn't necessarily mean that we're going to completely mean revert and go the other direction. All it means is as we get up to there, it's going to slow down. Price will slow down because dealers are actively trading against that price movement, right? So they're selling against that price movement. And that gives you an idea of how you can kind of, trade this. Correct, Bruce. The red orange levels here are your negative gamma. The positive gamma is, the blue side. And then you have your green are the gamma peaks and yellow are, gamma troughs. I focus heavily on the flip lines and the gamma peaks. And then I use the gamma regime that we're in, negative or positive, to determine the speed of how things are going to go. Right. So that's the key component. Does this make sense? You guys understanding this? Gamma trough and the way that OD has it set up is like an area. It's like a pathway for gamma, and it's used as a way of like we'll call it the least resistance, a path of least resistance. There's value into having it there, and sometimes price will follow it. But if you're really going to focus on this image, the basics at least, you're going to focus heavily more like on the gamma flip lines, the peaks, and understanding the regime that you're in. That's what I would always tell people to focus on. And then you can watch how price interacts on the troughs in these different areas and how you can trade them. Right. So that's the basics. Right. One thing to kind of show then is obviously the net market maker positions. So now that you have a basic understanding of where gamma goes, right, positive, negative, and how the speed is affected of that based off what dealers have to do, you can start to formulate some sort of plan based off the positioning for the day of where we could go, right? So the first thing that I will do is I will always pay attention to where the flips are, and these change as time goes on. If I go back on this platform and I go back to 10 o'clock, look at how wide of a range there was on this negative gamma. Right? We have a lot of potential movement in here, a lot of areas that we could get to. If I move it closer to today now, though, it started to quench up a little bit, right? And that's as positions adjust, right? We started down here at this big end of where the flip lines are, and then as people come into positions, it adjusts. Question here. So the long lines that are out there where price is now affects price now, and those little half circles affect price later when we reach there. So these little half circles that you're talking about, these ones right here, this is where you have to understand the broader scope of gamma. So let me take a step back here. If there was no zero DT positioning on the map. Let's say there was nothing for today. It was zero. But you have all this other options positionings on SPX for all the rest of the expirations. You would naturally have a heat map that would be produced that would be negative or positive, right? Based off the positions. Okay. Obviously, because gamma is largest on a zero DT basis, what you see here is these positions pushing out onto the heat map, right? So That's what forms what we call gamma pockets. So if I zoom in a bit here, right, you'll notice this one up here at 6650. That means up here, I'm assuming it's sold calls. I could check, but there's probably sold calls on the customer side, which makes the dealer long that gamma. And this is pushing out, right? It only pushes out so far though, because that gamma gets larger when we get closer to the expiration. So you see it peak out here, but it's not large enough to push out all the way onto the profile and change the regime all the way out here to where we're currently at with price, right? It doesn't push out all the way here yet. So these become important when we get closer to the end of day, and you can see at what time they'll be there. And this will adjust depending on where spot price is and how things, how we do go throughout the day and whether or not people are opening and closing positions. All of this changes, which is why we get it on a 10-minute interval, right? Because people are getting in and out of positions. Typically, most of the bigger players that are in here will put on a position early on in the morning and kind of hold through it. But then you'll see other people come in with more micro positions and try to get in and out, which has an effect on all of this, right? So these are your gamma flip levels still, but they're just not large enough to push out onto the broader picture of what you see on the heat map. Vice versa, all the way down here, you have enough, right? There's a big, huge positive gamma node that's pushing out, which is causing this to have a flip line down here, right? So that's how this works. Okay. Let me adjust this. I want this to go down to 64, and let's put it at 68. Right. And now I want to show you where these pockets are coming from, right? So if you look over here on the right side of this chart, which is the actual gamma exposure map, you'll notice these three big blue bars, right? These are all positive gamma areas for market makers, and that's what's causing the push over here, right? So you're seeing this at 65.35, 65.30, 65.25. You can see that peak. And what is causing that? You can go down here, and this is how I have mine set up, but you can look at what is it? So market makers are long 7,300 puts down there, which is why it's pushing out, which means some customer, you can see it on this end, sold those puts throughout the day, which is something we were tracking early on. The same thing happened on the call side. There was a pretty big, and I think he closed some of it down. I could be wrong. No, he's still here. Someone came in and was selling a bunch of calls this morning too at 66.55. So all of that pushes out onto the profile, and that's what you see, right? The sold calls up here, and then you see the customer sold puts down here, and that's what creates those pushes onto the map. Andy is saying we've been above the gamma flip line most of today, but we just crossed under. Did we? We did not. Gamma flip line is right here, this black line. So 65.57. Price low of day was 656.64 or 65.64. Sorry. So right here, we didn't get to it yet. What we did today was Charm, and Charm was awesome. And gave us some really great trades today, which we'll get into in a minute. But this is your gamma flip line. So we didn't quite get there. So we stay into this this negative end for now. Okay, so that gives you your this hashed line. You talking about this? Oh, that's just your price line. That's showing you current SPX price to create the candles. That's all. You turn it on and off. Same thing here, just telling you current spot. Yep, no problem. So then what I obviously do from, to understand how this is being built, right? I have my own setup. Everybody has their own way of looking at this, but I always show customer side on the puts and calls so I can see what they're doing easily, whether they're selling puts, buying puts, what kind of spreads are being put on, and see how they adjust over time. And then I keep net market maker positioning, but I don't have it set to gamma, like GEX. I have it set to the position number. And that's only, and I explained this yesterday, but the only reason I do it this way is because I like to see where the big levels are, even if we're not close to them yet from a spot price perspective. Up here, if you set this to gamma exposure, right, GEX, it's going to calculate these values based off spot, which is fine. Like, you're obviously, if we go lower, this one will get increased with size. But that's why I like to see this, because now I can frame an opinion, right? So what I did today and what I was looking at was like, okay, based off the current positioning, I see a big positive gamma block here and I see a block up here. So I'm looking for price is going to stay in this particular range. And I think it will slow down as we get to these bigger bars, right? So now you could say, okay, I know my range for the day that we could potentially sit in. Again, if price action wants it, it can always push through it. But we know that if this is going to be a positive gamma block, like we talked about, things should slow down as we get to them. Time of day obviously matters. If we end up going and getting a headline and we just sell off like crazy, right? And it's early on, maybe it doesn't add as much of a blow to it to slow it down, but we are dynamically hedging as time goes on. And the reason that we are talking about all of this, right, is from the dealer hedging perspective. That is the whole point. It's something they have to do, and we actually have unique insight to know whether they have to buy or sell futures. So one, taking a step back on all of this, the reason we're looking at it, the way that they hedge is in the futures market. So if they know that there's a big position down here, right, which this is, short puts, which makes them long gamma, as we press into this level, and if we get below it and we get into some type of positive gamma area, they'll flip on how they're trading with price, right? So if it's positive, they'll start trading against it. If it's negative, they'll start trading with it. And that's something that you can understand, and that's what gives you your speed for the day. Yeah, YH, that's what I just kind of explained, right? I keep this up here this way so I can see what the current gamma values are, especially as time goes on. But I use this to formulate where all the actual positions are, because this is the actual position. This is gamma exposure calculated off of the position. So it's something that I actually kind of figured out on my own at one point, when I was looking at this from a calculation. I was like, man, it's weird. You'll see these big levels really far away from spot that may or may not come into play, but then you won't see them here, and that's because this is a mathematical calculation to give you gamma, and this is actually giving you the true positions. They just don't matter until spot gets to them, right? Like down here, does anybody care that we have 7,000 puts here giving market makers some positive gamma for some support down at 64.25 when spot price is at 65.78? No. But if we get a headline and we start selling off and and it just starts going with a lot of speed, I have an area of interest now. I know, and I don't have to wait for this to update on a 10-minute interval to know that there's a potential level down there. That's why I look at it this way. Okay. And the more time you spend with this, the easier this will, become, and you guys will understand it. The way that you want to do is you want to keep this stuff simple. People like to complicate it, and it does seem complicated at first when you talk about it, especially if you've never been exposed to it. But this stuff's really simple. Like it's really not that complicated. But it gets complicated online because everyone has this if this then this has to happen. The only thing that we're talking about is if we press into a big area of positive gamma, dealers have to sell. We know that against price. Does it mean we fade heavily? We don't know, right? It's reactive to the price action. Same thing happens on the negative side. It's going to react to the price action, and it's going to drive us with a little bit more speed inside of the negative pockets. And that's where it's important. The levels that you gain of where things could slow down or speed up is what you're gaining from this picture. And this is where most people kind of fail when it comes to trading on an intraday basis. If you don't know the inflection points or the environment you're trading in, you're probably going to get crushed. Today is a perfect example of that. If you were a person that had a directional bias, we've basically done nothing, but we've gone to a lot of areas with speed today. Lots of speed, right? Lots of ups and downs. If you were directional the whole day, you've pretty much done nothing. If you were scalping and playing direction off of these levels, there's plenty of trades that you could take, knowing that there's a potential increase on the speed end because we're in negative gamma, and you kind of know where those inflection points are. Make sense? Lose anybody? Cool. Another thing that I wanted to discuss then is what happened today. And again, if you guys have questions, again, keep typing them. I'll get to all the questions you guys have, even if I have to backtrack. One of the important things too that happened is we have something called charm, right? This gave us some incredible trades today, and it's still kind of following it, which is awesome. But I have my colors flipped here. I set my colors to just out of ease because then I can understand if it's red, they're selling, blue, they're buying. It's just a way for me to look at it. The typical colors on this are different, but you can change them inside the platform. Um, we got another question on gamma, so let me backtrack. Do you have any framework before session, any additional than gamma levels and range? Yes, but for the sake of what we're talking about today, I probably won't go too deep into it. This gets into volatility regimes a little bit more, which we can see on the VIX. And I know that the team is working and building a dashboard for this, which I'm excited about. But the way that my pre-market like checklist is understand where we're going to be, take a look at where the potential range is from the gamma levels, see where we're at from a charm perspective to get a potential direction, and then wait for a zero DT position to layer in to see how that changes the scope of things. And then after that, you're diving more into formulating plans based on what's happening with the price action and what's going on. So like I go, okay, I have a gamma level here that I'm interested, boom, mark it on my chart. What is important is at least to note the pre-market positions and how those have been sitting there, and then what's considered a zero DTE position as they layer into it. That gives you a better sense of what's going on. And the reason being is I'm not that you get directional bias, but I do like using the strike breakdowns to see what people are betting on intraday. And that's a second way of using this. If you're not just talking about the gamma perspective or the charm, is like you can actually see what people are positioning for. So like when Condor Men comes in or somebody comes in and sells it, you say, okay, they're betting we don't break through this. Why does that matter to me? Well, it gives me a level that I can go in, and people love to tail it. I'm not going to tail it. That's not the way I trade. Other people love to tail when they see somebody has like 10,000 sold contracts somewhere and they think it's going to be safe, right? But I like to see that. So that's why I pay attention a lot more to the positioning and bets. Like if someone's coming in and buying a bunch of at the money calls constantly, not that it gives me a complete bias, but it's something to pay attention to for me, from my perspective. That's just how I use this as a secondary way of trading. It doesn't really affect what I'm talking about when it comes to like the gamma and charm. It's just another way you can use this data to find like quick information on what people are doing. It has to be significant size. Like I don't care what 500 contracts don't matter to me. 1,000 contracts maybe, but I want to see 1,500 plus to get excited about something. Like this here, people would go and, oh, this is like an inflection point. Like we might stall here. We could, but why guess on whether or not we could when everything else is flanked by negative gamma? I'd much rather wait instead of playing something like this for us to get to an actual range on the gamma flip lines or a gamma peak than to worry about what could potentially happen here. And that's just the art of the trade. It's just the way that I perceive this and trade it. If you decide you want to do it differently, you obviously can. That's why all this information's here. Charting You is saying, I've seen online sites with gamma constructs for individual stocks. Are they legit or just implied from open interest? So I have unique insights to this because it's something that we do on our end over at the Steam Room. Anything that you see individual stock wise is not signed exchange data. It's going to be off of open interest. Okay. So the value that you can gain from that on the individual names, in my personal opinion, is minimal if you're looking at it from a hedging perspective. And there's a good example of this that I can show even on SPX. But it's if they make the assumption on the naive models that all calls are sold, which makes market makers long that gamma, and all puts are bought, which makes dealers short that gamma. Now you just have big levels. You can use it as a way to understand like where there's a lot of volume or open interest sitting, but you can't use it from a hedging perspective. So because you don't know, right? Let's say that someone, instead of selling those calls, bought them. What would show up on this map on an equity position, right? It would show the opposite of what you're thinking, right? If they sold those calls, dealers get long the gamma. If they bought the calls, dealers are short that gamma. So if you have this wall of naive gamma and it's saying it's positive, well, that'd be opposite of what's really happening. It's negative. So you might get speed going through that level, not will revert off of that level. So that's where it gets a little bit tougher when it comes to looking at this on individual names, right? The best part of what we have here is you don't have to guess. This is legitimately signed from SIBO. Like they give you the data. Hopefully that makes sense. All right. I want to dive into some charm now because this was great. We got some really good trades from those that are have been trading with me today off of this. So again, I was saying mine's different colors than what you have, but just keep in mind if charm values are positive, it means that a dealer's book with respect to time is going to increase in delta, which means they have to sell passively in the futures market to offset that. And then vice versa in the blue, if the values are negative, it means they're going to have to buy and it's supportive because they're losing delta on their books as time goes on. The way we use charm and the way I use it is for pathways for the day. For whatever reason, right? These flip lines that we talk about, especially the charm flip line, is usually a very good support or resistance level, right? It's really really great. And sometimes they'll just follow that as the pathway for the day. So if you're looking for potential directions of where we could go, you go to charm, right? So it's the first thing I'll look at is once we open up is where is the current pathway. I have my colors flipped and I have black as the neutral. But if I go back, I want to show you guys what today looked like. And I have screenshots of this, but let's go back once this updates. Come on. Just refresh real quick. Sorry, sometimes my net gets a little buggy when doing this. I have so many windows open that I probably need to shut down. Come on. All right, while this loads, I'm gonna pull up what we did today because I have screenshots of it. Let me go grab them. All right, there we go. Now I don't even need to. Okay, cool. So let's go back a little bit from earlier on in the day. Okay. So when you guys see this dashed line that's sitting vertically like this, that's showing when the snapshot was taken. So I know that this snapshot was taken, and I have it up here at 9:50 Eastern time this morning. Right. So I knew going into the day off the open that we are in a suppressive charm and it's early on in the day. Remember, charm values are most important and largest end of day, right? So you could see it by looking at the intensity of the colors, and this is why I have it set up this way. You see how intense this blob is down here, or how intense it is in this little circle here, or intense it is up here, right? That means that there's so much that dealers will have to do for this last hour, and here it would be like the last 15 minutes or 10 minutes, right? So this gives you how much they're going to have to passively buy or sell. If you notice the candles for the day, what do you see? We followed the charm line. It's all we've done. Right. We've gone lower, way past it, but we're just following it. Right. So this is your pathway for the day. This gives you some direction. If we would have gotten above the charm line, then this changes. Now we're not looking for us to go lower. We'd be looking for this to kind of push higher in one of these directions. Where it goes, nobody can tell you, but you just know that this gives you like that wind of where we could go from a directional standpoint. So I use this for pathways, and it's not a coincidence that we followed it. Now, if you go, up to here, right? This is the first trade that we had for the day. Off of this, we go up a little bit more. I think it was right here. Okay, right? The charm values changed. They started to change as the day went on, as people layered into zero DT positioning, right? The values changed. We went from 66, 04, 05 down here to 65, 95. Well, what happened? We bumped our head up against that charm level and we faded. The first touches of these usually tend to be really, really good. And then as time goes on, even the second touch worked really well. Right. So you can see these values, and this gives you a potential trade to take, right? You can take some at the monies and scalp it. That's what I do. or you could trade it with futures, whatever you want. There's a million ways you can do this, but this is one of the ways that we trade off of this information. Okay, we got to a charm flip. We got to it with a lot of price action speed from the negative gamma that we saw early on. And price really wanted to keep going higher. We got a nice mean reverting scalp. And then it happened again later on, too. So there's two times. But you'll notice how it keeps following the pathway. If I keep going throughout the day, and you're seeing where these screenshots are, we just sat on that line for a while until we popped above, and then we couldn't hold it, and we came down below, and it just kept following. Then we got back up to the line, couldn't get above it, faded again, and then we just rode it, and we keep riding it, right? Up until where we're kind of at now, right? Then we started to fade a bit more, and you could see how this is taking shape. You can see the direction. Now, what I would be looking for is, can price get above this at 6,600 now to change and flip what we're doing? Or the more likely outcome is we probably keep fading into this zone, right? And then when we get into here, you'll see these charm values kind of explode in size, meaning the dealer is going to be passive sellers. So this gives you your guardrails. In the same way that I talked about gamma, where you could get some levels, right, to see how wide it is. Well, look how wide this range is. So you mark them and you understand that this is negative gamma. And now you have this potential reaction. And then you go down and you look at charm and say, okay, well, this is even tighter. So now I have to mark this level and understand that this is when we could potentially flip. And that would change kind of like your bias on the day, right? So this is where you get those guardrails. This is how I use it. Does anybody have any questions on that? Cool. So hopefully, I mean, most of this made sense. I mean, we can get way more into the nitty gritty on whatever you guys want as we do more and more of these. I just figured for the first couple, it might be good to get some base knowledge. I don't know where everyone's coming from with all of this. There's a lot more, I wouldn't say advanced trades, but there's a lot of ways that you can play this, right? When we're talking about charm flip lines, right? Those are just reversion type scalps. If we get into like those positive gamma magnet trades that I mentioned yesterday, right? You could play those with flies. It just depends on the time and the timing that you want to have on whatever trade you're taking. And that's how you're able to kind of utilize this information to make better decisions. And it goes even if you're not a full-on index trader all the time, like if you don't have this info and you're playing equities or anything like that, you don't know what you're trading, right? Like there's a reason why all of the big hitters use SPX with their options to hedge their books and adjust. And there's a reason why all of the big institutions talk about gamma on SPX. There's a reason they do it. That's how important all of this is. And this gives you your regimes in which you're going to trade. And the same thing can be said when we do the VIX. And I know they're going to have a volatility dashboard, so we could talk more about that when it comes out, but you can get the same information on the VIX, right? Like if I go, here and I go flop this to the VIX, right? This matters. Okay. Now I know the regime I'm in on volatility. Do I know what volatility is going to do? No, but I know now that volatility is going to be volatile, right? Up vol, down vol, doesn't matter, but I can look at this gamma map and understand, right, that we're in negative gamma on the VIX too. Okay. Well, that adds to the regime that I'm in. That adds to my understanding of the type of market we're in. And you can see it. Just go pull an SPX chart today. Go pull an SPX chart from any of the other days. You'll see how fast we're moving in a lot of these different directions. This is a function of all this information you have, which helps you make better decisions when you trade. And adjust your time frames. The one thing you can't control is what anybody says in the news, right? That's one thing you can't control. So you always take that into account and you trade as best you can off the data and information that you have. Any more questions? Yeah, sure, Maurice. So that's what I was talking about before. Let's go to this let's go show you what the morning would have been. Today's not the best day. Be better when you get a big spread player, but let's just try to do this with charm. Okay. Charm will be the easiest way to kind of do this at first. Let's go. Okay. This is an hour before the open. This is what price did for the day. This is taken an hour for the open, right? This obviously gives you your pathways, but look at how far those lines were. Look how far up there. They're all the way up 66.40. So if you have the daily model, sure, you have your pathways. You can see where we go. But as we showed in earlier, because zero DTE positionings have popped in, and that changes on the intraday side, that will affect your values and where the lines go. That will affect how gamma looks, right? And all of the positions that you have. Because everyone typically starts to put on their positions early on in the morning, and then that adjusts as time goes on. And it matters too if people start taking off their hedges, start taking off their calls, start adding puts, like that changes the profile materially, especially in the current market that we're in, where headline risk is always a thing. So you need to see these updates on an intraday basis, in my opinion. Can it be used on a daily? Absolutely. You get your basic understanding of where those guardrails are from a charm perspective. You can understand that I'm going to be in this negative pocket, but you really don't know where everything changes until those position comes in. Now look at what happens here. Watch how much this comes down. Right? Came all the way down to here. Right? That's a 50 handle swing on where the values of charm were. The same thing happened on the gamma side. Like these peaks came in. We're like, oh, well, I need to know where those peaks are. So that's the only real difference. You could still formulate a plan off the pre-market. Absolutely. You can see those levels. But if you really want to be up to date with what's going on, especially in this current market we're in, the intraday updates, in my personal opinion, are worth every penny. Any interesting threshold to evaluate a trade with charm? What are you asking, Nama? Are you asking what the values have to be where I can say, hey, the more than likely we're going to follow the charm path? Or like what the okay, so you're asking the values. Well, that's a nuanced question, right? I'm a one thing when I started working with OD, I told them like I'm always going to go off of my experience and how I've used this, and I'm not going to ever try to sell this in a way where it's misleads people that like, oh, if charm is we're going to go down, we go down. This again gives you those pathways to where you could go. I consider significant charm values when they get to be, I'll call it 150 to 200. And I consider them even more significant if they push out an hour before the close or even more, right? But that's just me and the way that I have looked at it. There's a lot of really great trades that you can take off the charm profile almost by itself at the end of day. And what I mean by that would be, let's say that price with an hour to go gets somewhere around here, right? The 6490, 6500. And then we get into this big, big circle down here that's got a lot of charm. Okay. We know if you've traded enough that typically at the last hour, you're not getting an influx of liquidity until maybe the last 15, 20 minutes, especially with mock the last 10 minutes. This is going to be very significant to overtake when someone has to dump 400 futes over a 5-minute span, right? Can they absorb it? Can they not? We don't know. Someone has to be hungry enough, but you know for a fact that they have to dump futures in some capacity, right? Slowly over time. So the way I would trade this is if we got somewhere here with significant values for the last hour, I would be looking for some downside, right? And unless they decide to keep it up here and ride the charm flip, that's where you have to interpret the data and make decisions on your own and watch this long enough. And you'll be able to see like, yeah, no, I've seen this before. This is significant, or I've seen this before. It's not. And adjust your trading based off of that info, right? Like even here, like we're at 35. So that's 70 contracts to sell over 5 minutes. Do we consider that? Do you consider that significant? It is something, yes, when price action's slow for sure. Like that's something. So I still have a lean that we're probably going to end up in this area, but I'm not making a bet on it quite yet. At least that's just me. I wouldn't be making a bet only because of the environment we're in. If we're in a different environment, and I'm going to go show this. Let me go show you this from yesterday. I don't have the perfect example, but on this, and I'll make some more of these. This is like a positive gamma trade, right? I call these gamma magnet trades, right? Price is here. We're in a stable market. There's a lot of positive gamma. Price likes to gravitate towards it. So you could take a fly and you can go there. Well, what has to happen on the charm profile for this trade to work? It needs to be a blue, or my color is blue. It needs to be negative charm values where they have to buy delta, right? Because now you have a tailwind and direction to help with that trade. So I know based off of the data that I have The market's stable. We're in a positive environment off the gamma picture. I got charm values helping me, and they give me a place. And I have a clear cut area where I know the values are so large on the gamma side that dealers are going to quench volatility and slow it down. And I have a glorious fly trade to take, right? 6140 at the center. And you're always going to center it around what you think we go to, but not what we go through. Because the point of the fly is to decay the middle part of the option, while the bottom side you collect all of that delta from the trade. So that's how you use it in conjunction, right? This is just one example. I got more in here, but like gamma peak trades, right? You fade off the gamma peaks. Those are reverting trades. And then the same thing happens on the bottom. Here, right? You could have traded this, and I don't have the charm pictures, but you could have traded this multiple ways, right? You see that price action is going lower. Charm during this time would have been suppressive. Okay, well, you have a clear-cut target to go on the fly side, and that's a big trade. Would you take it right off the open? No, no one is, because you don't know, right? It's a reaction. But then once you see the selling pressure come in and you know that charm is going to push you in this direction and you have a clear peak to get to, right? You have a clear put trade and a bounce. So that's another way that you can kind of, adjust and trade it. And you'll see it, right? This is just a time thing. Spend enough time with this and, you'll be blind without it. So that's how all of this kind of works. And we could dive into, more as we kind of go on. But any more questions before I kind of, cut it for now? Can you find the directional bias for end of day or the next day? Well, yeah, you are going to find where the bias is through the charm values, right? That's what we were talking about. If this is where your direction comes from of where we can go, your pathways, and we sit around here, more than likely, unless you get a crazy influx of buying, you're going to probably end up in this area. So you get that direction, right? You see how it's going to be. How long it takes to get there, I couldn't tell you. But if you get a positive headline, right, and it pops above it, then it's a little bit different. Direction is what you get from this, and gamma is what you get the reaction of what happens with price action. And then if you want to see direction for the next day, I mean, that's a little bit, given the current environment, it is more difficult to figure out where we're going to go the next day based off of like all of the data, because you don't know what's going to happen with oil and Iran and all of that. I'm just being honest, right? You just don't know. But getting directional bias, if you're looking to use this information to swing, then you need to look at a bigger picture, all right? And the way you would look at that bigger picture, and what I was talking about today with my group, is going into positions and looking at a larger structure of your positioning, right? So, and I would look at this from a net perspective for now, right? But if you look at this gives you a clear understanding and an idea of where the inflection points are going to be. 6,600 is a pivot zone, and I'll show you why it's a pivot and not necessarily an acceleration downstrike. 6,500 is a big level to break, where if we break this, there's so much on the short put side from a net market maker position here, right? That this is an acceleration strike, and it gets worse because you have all this other negative gamma below. So this is where you can understand what the structure of everything is inside of OD, is to kind of get an idea of all of this positioning. And then you could adjust the expirations, right? If I want to know where AM is for OPEX, which is really important, I can see how much of it's going to come off and adjust, right? Like this is just all over the place, but you see a clear inflection point in the markets. Same thing on the upside. Where should stuff slow down? We're nowhere near it, but that's where you gain the insight and information. This is probably my favorite place to hang out to try to understand the broader scope and picture, is looking at positional insights. Carnegie, I will post the recordings inside of SPX Floor, and then I'll talk to the OD guys about maybe having a place where I can pin them so you guys can see them. Yep, no problem. Right. So, what I was talking about with everyone just briefly, and then we'll shut her down, is looking at the inflection points that we have right now, right? The 6,600, this is what people are not looking at though. And this is getting in the nitty gritty. But if you look at 6,600, it's not just short puts, it's also short calls. If you remember the delta of short puts and short calls, they're counteract each other a little bit. So there's something to pay attention to. Will delta still have to be hedged and accelerated when we get through 6,600? Yes, but there's a little bit of an offset. And actually, they sold some of this today. This value on the put side was much larger at the time. So they've closed some down, which is interesting. So this stays as a pivot. And then you got your real, oh crap, strike down at 6,500 for now. But this will change with OPEX. So we got to wait to get through OPEX. And but we won't get into the nitty gritty of all of this. I just wanted to show you another place that you could go to. Yeah, of course. Let me get with them and see this PDF that I made is for my trading group that we trade every day with. They have a lot like more deeper education than what I have on this. This is just like a quick reference guide. So let me get with them and find some more info. But the way that I like to show this off is just like, okay, what's actionable, right? The people talk about it ad nauseum, but no one's really telling you how to trade it. And that's the art part. Everyone trades this differently. I've got people that trade premium off of this and collect premium off of levels. And I'm using it as a way to understand the environment I'm trading in and find levels of inflection that I can make trades off of. And that's what you'll find as time goes on. Cool. I will post the link to this. You guys can go back and watch it if need be. We'll continue doing these on Tuesdays and Thursdays at 1 Eastern. And we'll slowly get more in depth with everything. And yes, I am inside of the Discord if you need me. I also run my own trading room with all of this that I'm in there every day posting commentary on. And then for any of those that are interested in purchasing options depth, if you don't have it, go and head over to options depth. We have a code, Steamroom. And if you go to steamroom.trade/options depth, I can drop a link for you guys. You get 10% off. We run a special whenever I'm on the mic, and you guys can go and use that. I'll post it on X below this video as well. The link. YH, I am in a community called Steamroom Trading. So steamroomtrading.com. We have a room called 0 Day, which focuses only on index trading and 0 day, 0 DTE options. And we talk about this stuff all the time, as well as we have our own way of trading it. But cool. Thank you guys for tuning in. We'll do more of these. Hopefully it was useful. And I'll see you guys on Tuesday.